Welcome in. You are listening to a daily editorial here on the KE Report. I'm joined by Jordan Roy-Byrne, founder and editor of thedailygold.com. Jordan, you and I have been talking about gold in the US dollar a lot recently, and we will touch on that a little bit later. But first, I want to start off with the ratio between gold and the S&P. You and I were looking at a couple charts here and seeing that this ratio, obviously because of gold moving up and the S&P actually getting quite hurt yesterday, we're seeing this chart try to break out. And really, when you connect the highs from last year and draw a downtrend line, we have actually broken out just this week on this chart. What are your comments regarding gold and the S&P, considering gold is relatively strong and the S&P really hasn't been doing much recently?
Well, I mean, I don't want to say that's exactly what we needed to see, because what I've been thinking in recent weeks and perhaps the last couple of months is that the gold against the stock market ratio, we really need to see that break out and rise in favor of gold, because just a bigger picture view, gold performs best when it's outperforming the S&P 500, and we know that the U.S. equity market has had a tremendous bull market. But for gold to really get in its own bull market, gold has to perform well, and the S&P, it doesn't necessarily have to go into this major crash or major bear market, but it has to stop performing well. And so that's why we focus on gold against the stock market ratio. And as you said, that is now showing a little breakout in favor of gold if you go back to the middle of last year, which is actually the second peak. The first peak was in February, but a lot of times this is a kind of a thing in technical analysis that most people don't know. But when you're looking at trend lines, you usually want to begin the trend line from the second peak, or the second, or if you're drawing an uptrend line, you want to begin it from the second high or low, and vice versa when you're looking at a trend line that's going down. Because a lot of times the trend is better illustrated by starting it at the second point and not like the very first point it begins. And if you look at that, going back to the middle of last year, that ratio, I just noticed, I noticed as we were talking, that ratio just broke out the downtrend in favor of gold. So that's a good sign. It still has a lot of work to do, but as you noted beforehand, it is getting close to a high for the year. If we would just see a little bit of follow through on that ratio, then it would be trading at the highest level probably since last November. So, that's getting close to a 10-month high, I think. And, that's encouraging. That's what we want to see as precious metals bulls. A gold bull market is not, gold goes up 10% and then the stock market goes up 20%. That's not a gold bull market. A gold bull market is when gold is really outperforming most everything, and especially the stock market. And in the last couple of months, we're starting to see evidence of that. And the breakout yesterday, that's a good sign. We'll see if it continues. Gold is showing strength against the other asset classes. So that we're just seeing continued good signs, in addition to the nominal chart of gold breaking above 1,300 last week, and now I think reaching 1,340.
Jordan, that's an interesting comment regarding the trend lines, and I thank you for sharing that. Always use kind of the second, either lower high or higher low, when drawing those trend lines. But Jordan, as you just mentioned, last week, gold breaking 1,300. This week, gold breaking this downtrend line. And if we get a little press above that most recent high in this ratio that happened at the beginning of April, then that would be, you could argue, three technical factors all lining up within a week. How often do you see that, and how significant is that?
That would be significant, because that's really the next resistance. I'm looking at, I don't have the 200-day moving average of that chart on my screen, but I have the 400-day, which is about just below 0.57. So that ratio is just below 0.55, which is right about where the April high is that you just mentioned. So getting above that would be critical, but then the next resistance is just below 0.57. So I think gold will probably test that 0.57 or a little bit below, but I think breaking above that line there, that 400-day moving average, would be a lot more significant than just breaking above the April high, which it looks like we could be a day or two away from breaking above that.
So, Jordan, as I mentioned on the onset, we have been talking a lot about the U.S. dollar, and both you and I have thought that the dollar is due for some sort of a bounce. You look at the daily chart, you look at the weekly chart, it is oversold in a lot of different technical metrics that you can look at. But the fact of the matter is, the dollar is still very much under pressure. Now, whether that is because people are expecting the ECB to start to taper a bit more of their QE program, or simply because we get a lot of words coming out of the Trump administration saying that they like a lower dollar. What happens if we don't get this bounce in the dollar? How does this change your assessment of the markets?
Well, that's a great question. I mean, looking at the dollar, we last talked a week ago, and it looked like the dollar was finally putting in a bottom. It had a bullish hammer and a strong day after that, and since then it's just done nothing but kind of just roll over again. And actually looking at the price action since the very end of July, it kind of looks like potentially a bearish running correction, but that's just a guess. I mean, it'll take time to know if that's the case or not. But, I mean, where the dollar is right now, just trading around 92, the next strong support is at 88. So it's possible that the dollar could plunge down to 88 before we actually see a sustained rebound. And gold, I mean, it's interesting because several months ago the dollar was tanking and gold wasn't doing anything, and now gold has finally picked up, and gold has picked up in real terms, and we notice it's showing strength against these other asset classes, which we want to see. We don't just want gold to be going up because the dollar is going down. We want it to be showing relative strength. But looking at the dollar chart right now, it looks to me like over the near term it's probably going to move lower, but perhaps it could, I mean, if it, again, it's at 92 and 88 is still, that's quite a ways away, but we'll have to see how high gold can get if it loses support at 91, 92. I mean, I know there's a low from last year in the 91s, and if it goes below that, then it probably will test 88, and we'll have to see how high that can push gold. Gold should be able to get to 1375. That's the target I've been talking about in recent weeks. But it'll be very interesting to see if this dollar weakness is enough to push gold above 1375, perhaps a little bit higher, perhaps get to 1400. I'm focused on, I mean, this is a little bit in advance, but I'm really focused on where gold is going to close September because it's the end of the quarter and there's quarterly resistance at 1330. And so a close in September above 1330 would be very significant. There's also monthly resistance at 1330 and then 1357. So if gold closes above 1357 this month, I mean, that would be a signal that gold is going to continue moving higher in the next couple months. Close above 1330 for gold would definitely be significant. So that's something I'm really going to be watching this month. Is we're starting off really strong, but let's see if gold can hold these gains into October, because if you're a bear, that's what you would want to see. You'd want to see selling at the end of the month, and then gold trades where it is now, but then closes below 1330 going into October. I mean, that would be negative and perhaps tell us that the dollar at some point was ready for a bigger bounce. I mean, I know that's several weeks in advance, but that's what I'm going to be focused on in the next several weeks, rather than just what happens over the next couple days or week or two.
Hey, I respect that, Jordan. I do like to look ahead. Sometimes the day-to-day movements can really just muddy the water of the overall trend, but it sounds like we both agree that right now gold has been very strong. Let's see this continued follow through above now some new resistance levels that we have finally broken above 1300. Man, it seems like it took forever to get above there. Jordan, can we get a quick comment on your reaction to how the stocks have been performing? We've seen a nice bump in a number of the stocks. Obviously, there is more money paying attention, I believe, that was sitting on the sidelines that's now being injected into the markets. What's your overall assessment of how the stocks have reacted while gold has been breaking out?
Well, I'm not surprised because I had told my subscribers, and I can't recall if we mentioned it here or not, but I was thinking that the stocks would really start to pick up once gold went through 1300, and not to pat myself on the back, but that's exactly what happened. I mean, I think it was Monday, gold went through 1,300. We had very strong gains in both GDX and GDXJ. I mean, they were lagging for many, many months. I mean, we were literally talking about it almost every week on your show. But something I noticed a couple weeks ago is the miners, the week before we had this breakout, the miners were quietly showing relative strength. I wrote an article about it, and it's hard because they were quietly showing this relative strength, but it was only for 1 week, and it was hard to know if, am I reading into something that's not really significant or not? Of course, only time will tell, but they were showing just a quiet relative strength 2 weeks ago, so they just started to outperform the metals, and then, of course, we had the breakout on Monday, and so that relative strength really went on steroids. But again, I mean, that's something that I expected. I mean, once gold was able to go above 1,300, we saw the miners react very positively. And just circling back several months, gold tested 1,300 multiple times earlier in the year, and so the miners underperforming was basically telling us that gold was not going to break 1,300. I mean, there was also the view, which I had for a little while, that gold has been very strong. The miners are not confirming gold's strength. Perhaps we're going to get a break lower, but right now we can say that the miners they were telling us that gold was not going to break 1,300, even though gold rallied up to it and tested it a couple times. And so after months and months of the miners underperforming, again a couple of weeks or a month ago, I wrote an article about this. If you look very closely, you can see that the miners were lagging badly from the end of winter into the spring. And then once we got into, I believe, the late spring or early summer, the miners actually started to, you have to look very carefully at the chart, but they started to match gold and they weren't underperforming anymore. And then they got to, at the end of August, what I talked about, a point where they actually were starting to outperform gold in just a very small manner. And again, gold going above 1,300, we saw the miners' relative strength and outperformance go on steroids. So I think that's really going to continue, at least until gold gets to 1,375. And it'll be interesting to see what happens next, because there's very significant resistance around 1,375. I mean, we already mentioned on the quarterly chart, there's monthly resistance. And so if gold is going to make this big breakout eventually at the end of the year, early next year, through 1,375 and 1,400, the miners would then really, really outperform. So in the big picture, I think this outperformance has a good chance to continue into next year, but we'll see what happens. We have to watch very closely as gold nears that initial resistance around 1,375, because that could be the point when we get a little correction to the recent strength that we've seen. But again, still a little bit more upside as gold is, is trading in the 1340s right now, or the high 1330s. And so there's still some room for gold to run up and test 1375.
All right, Jordan. Well, hey, thank you as always for your technical assessment of where gold is going, but then also realizing that gold doesn't actually act in a vacuum, and we need to consider many different factors. And right now, some of the currency moves, I believe, are some of the most interesting. But again, combined with some weakness in the U.S. equity market, this is all lining up quite positively for gold. Let's see how we move through the next few weeks. Thanks for your time today, Jordan.
Thanks for having me.